What is up, good people? Jungle Inc. here. Hope you're doing well. Pretty strong day for crypto today. Bitcoin, 47,000, up about 2.7% on the 24-hour. Ethereum at 2,500. XRP, 52.5 cents, up about 1.4% on the day. Combing through the top coins, AVAX, up about 10%, double-digit growth on the day. And I just saw Tony from Thinking Crypto on the Chain Live with Chip and Jeff. And in the chat, I asked him, outside of Ethereum, what is your favorite layer 1 smart contract blockchain? AVAX was his pick. Look at that. Nice double-digit growth. Now, I saw that meme coin that's trading on Coinbase, Bonkers or Bongos, or I don't know what the heck it's named. It was up like 25%. There's a spattering of good growth out there, but in general, everything's kind of flat up or down 1% or so. Now, it's being reported that this year, crypto will be absent from the Superbowl. No crypto commercials. We remember during the last bull run, we had Coinbase and quite a few crypto commercials, but this year we're not having any. Now, Kraken, their chief marketing officer, is saying, you know what? The Super Bowl is too US-centric, and really this next growth phase of crypto adoption, it's going to be global in scale, and they can use their advertising dollars in a better way to hit their global audience. Now, Coinbase, they're using all of their free cash flows, directing it to lobbying efforts, trying to make a change in Washington there. And to me, the big surprise here, you think you get a Bitcoin ETF commercial, BlackRock, Fidelity, someone like that, spending a little money trying to capture this market. But this year at least, ain't no one spending that foolish Super Bowl money. I wouldn't be surprised, though, to see it return in 2025. Now, New York Attorney General is expanding the state's lawsuit versus the Digital Currency Group and the Winklevoss twins. And this is a big one. The lawsuit now is for more than $3 billion in damages. And I'll tell you this, I'm no fan of the New York Attorney General, that's for sure. But, I see the purpose of this. People put their money with big companies here, not some fly-by-night protocol run by anonymous individuals. You should be able to trust the Digital Currency Group and, big exchanges like Gemini, and you obviously could not. And little did a lot of those investors know, they were just YOLOing your money away with fools like Three Arrows Capital and Do Kwon, and they lost a lot of people's money. I don't know, ultimately, how big this is going to be. It may not be that full $3 billion, but it's going to be a big check to write, and it should be. And I think this is why we see with Grayscale, which is really a Digital Currency Group subsidiary, they're refusing to bring down those fees because I think they need the cash flow. They need to be stacking their cash because this thing could wipe them out. And, they're already in shaky ground even before this. Now, I'm seeing this crazy report that Sam Altman is looking for $5 to $7 trillion to build new AI chips. And, we're talking about two Apple corporations. Like, who's going to have $5 or $7 trillion to invest in this? That ain't happening. I don't know if he's asking for that, if he's really trying to fundraise, but that number just sounds quite stupid to me. Even though, of course, AI is going to be massive. It's so important. I mean, where are you going to get $5 or $7 trillion in investment capital? Unless, I guess, from governments or something like that. That sum of money is bigger than some, significant capital markets in totality. Like, he ain't raising no $7 trillion. That's just stupid. XRP. We see this debate right now. We see all these stats, Very few people are using the decentralized exchange. And the one thing that has been touted is that, XRP investors, they're just hodlers. They just want to hold on to their XRP. They don't want to, use it. And I reject that in a big way. First of all, a lot of XRP investors, they do participate in DeFi, and they use decentralized exchanges to invest in projects. They just don't do it on the XRP ledger. It's not our job really to make all this work. In my opinion, there's a low number of quality projects to invest in. Now, I'm not saying there aren't any. There are some. And there's some people doing some great work. But it's not to the caliber of other chains. Further, I believe the tools that we use to invest on the decentralized exchange, they're quite poor. When compared at least to their contemporaries out there. Their competitive wallets. It's just not really easy or friendly to use. And this has nothing to do with the capabilities of the XRP ledger. These are the software systems that have been built to access and leverage that technology. Now, it's not to say that the some wallet is not an amazing application. I think it just needs some fine tuning because, when I'm buying a crypto, when I am investing in a new project, I'm thinking, down the road, is new money going to come flooding in here? Am I going to make money from this investment? And when I look at that whole procedure, yeah, maybe I know how to use the DEX, maybe you know how to do so, but will the tourists in the next bull run be able to figure this out? And there's just a lot more friendlier applications out there, whether it's the Trust wallet with Binance or, something on Ethereum or Cardano or Polkadot. There's just a lot of better systems. I think we need some tuning here. We need some adjustments to make this a friendlier place to use these capabilities. We need stable coins that will build more liquidity, and we need powerhouse stable coins, not Mickey Mouse ones. Further, when we just look at the naming of things, like the thought that's put into all this, when we look at, Circle's digital dollar, like that's something someone might want to use. That sounds advanced. When we look at what we have as a stable coin on the XRP ledger, it's named the GateHub IOU. I don't want IOUs. Anytime in life I've ever had an IOU, they likely still owe me money, right? That's a bad branding. And there is no material difference between an XRP ledger IOU and an Ethereum ERC20 token or other issued asset. They're the same thing, just what you call one makes it much more appealing. We got to put more thought into this whole ecosystem because it is no longer about just holding an XRP token and having Ripple use those suckers for cross-border payments. There's a lot more going on in the modern era of crypto, and XRP is capable of handling that. It's just the builders, the people that are really pushing the system out, they got to think about this a little more. That's all I'm saying. And, there's opportunity out there. Last bull run, Minus Wells had over 100x with his EQ token. Big gainer during the bull run. But ultimately, it's not the community's job to go out there and get people excited about projects being built or, capability. It's up to those builders. They're the ones that are going to become billionaires if successful to sell their vision, to make people understand the value they are building and why they want to be involved. They got to do that. They got to sell us on that vision. Because there's so much going on, we'll just go to another chain, buy another coin, invest in another project, use another decentralized exchange. We're here to make money. We're the ones with the dollar bills. They got to sell us on what they are doing, not the other way around. I think sometimes in this ecosystem, they get it confused. Those aren't our job. We have the money, and they got to do the building and the selling. I invest in XRP because I think it's a premium crypto asset and I want to make money, not because I want another job. Now, Polkadot had a big day on Tuesday showing its scalability, its speed, its efficiency. And we see Polkadot achieved a speed record of minting 4,930 NFTs per minute, surpassing anything we've even seen on Solana. And the reason they were minting all these NFTs, it was a game forever has fallen, running on its own parachain. And so when we look at Polkadot, modular in its build out, interoperability at its core, and that's kind of similar to we see the vision that David Schwartz has laid out for the XRP ledger. They want to build this out in modular fashion. They want it to be interoperable with other chains. And that's going to be the key phrase for this next bull run. And that's the same kind of deal you get with Cosmos, Atom, and probably every significant project out there, to be honest. Charles Hoskinson says the biggest blockchain challenge for 2024 is the complexity of achieving effective and efficient on-chain governance. And this is a big deal. It's not easy to design these systems where power doesn't, congregate with a core, select group of individuals. Has to be well thought out. And it's one area that really Charles and Cardano thinks about a lot. It's very important for long-term sustainability. And if there's one way we can improve, I think, on the XRP ledger, where we have the most room for improvement, it's governance, because there just ain't any, right? There just is not any governance on the XRP ledger. It's a decentralized system, and you need to respect that and have some form of governance. And this is the one thing I do like about Cardano. They're so well thought out on how they're building this out, doing so correctly from the ground up, so you don't run into massive issues down the road where you have to do full redesigns, things of this nature. I think they're doing an excellent job. Now, Max Kaiser disagrees with me. He predicts Cardano goes to zero. Like, this guy's just a hater. Come on. Like, if anything is not Bitcoin, it's going to zero. The guy's ridiculous. He's a clown, but he can be quite entertaining. Now, the Federal Reserve, they've hit their inflation target 2%, or at least supposedly. And why aren't they starting to cut rates? Fear. They're worried that the minute they do cut rates, we're going to get back right to the same inflation numbers here. We see the S&P 500 closing for the first time above 5,000. We look at these Cook job reports that supposedly were setting records and new jobs and things like that. And Jerome Powell says he believes that the U.S. banking system is sound and resilient. I would argue that it is insolvent, just my opinion. And also, I'd be concerned with commercial real estate. But is that a problem we can really alleviate by bringing down rates? To some extent, but there's a lot of long-term problems with commercial real estate. We're going to have to reimagine what we're going to do with a lot of these properties, a lot of that office space. It just ain't coming back. So there's a lot of work to be done. Some of these problems are only going to get worse as AI starts taking a lot of jobs. For those office jobs that do stick around, you're going to have less bodies in there anyway. So I guess I understand the theory. Keep the interest rates elevated a little bit. Try to make sure inflation doesn't come back, because a lot of these problems you can't solve. But I have a feeling they're going to wait too long, just like they did to react to inflation when it first started. They were too slow to start raising the interest rates, and I think we're going to run into a little bit of trouble here. Lastly, Stuart Alderati, discussing Gary Gensler, said, well, he's politically toxic. He's a serial loser in court. His staff has been caught lying to judges. And the SEC's Twitter account was hacked in an embarrassing way, and really a damaging way. Caused a lot of, turmoil in the market. What I would take from this, settlement propositions ain't looking good. I think this battle continues. Let me know what you think down below. And as always, please like, please subscribe. The revolution will be televised right here on Jungle Link.